What would you do with an extra $25, $50, even $100 a day? What if you could count on that money every single day? I'm putting together a dividend income portfolio that does just that. Spins off cash flow 5 days a week, every week of the year. In this video, I'll show you how this system works and then reveal the 19 dividend stocks to buy. We're talking dividend income every single day today on Let's Talk Money. Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel and the second video in our daily dividends portfolio. You out there in the nation know I love those dividends, but you also know I don't have the patience to wait for those dividends each quarter. Love getting paid, don't love waiting for it. So we're building a portfolio of dividend stocks that don't make you wait. A dividend investing strategy that will put cash into your account every single day. We can do this because most dividend stocks pay out on extremely consistent schedules. Investors love the certainty, and dividend paying companies try paying out on the same week, even the same day, every 3 months. That means with a little bit of strategy, we can fill our portfolio with income stocks that are going to time our payments for every day of the week. Now, how this is going to work is through 3 videos, I'll highlight the dividend stocks that are going to be paying out in the next month ahead. For example, today we'll highlight 19 dividend stocks that are going to pay out in November, February, May, and August. I'll show you exactly how I found these stocks later in the video, but here you can see that I analyzed almost 400 dividend stocks to find the perfect income portfolio for each and every month. The goal here is going to be a portfolio of 70 to 80 stocks that will generate a dividend income on every weekday of every month. The best part here is not only is this going to be a well-diversified portfolio producing those constant dividends, I picked the best dividend stocks with a yield of nearly 4%. That's almost twice the average dividend yield on the market. Now I'll be putting this video and our other 2 in a playlist on the channel called Daily Dividend Income Portfolio. So if you're not part of that community yet, just tap that little subscribe button so you don't miss a single episode. Our first stock on the list, $145 billion energy powerhouse Chevron, ticker CVX, and its 6.7% dividend yield. Nation, energy has been slammed this year with the price of oil kind of stagnating around that $40 per barrel level, down 30% from the beginning of the year. But millions of barrels a day in production are being taken off this market from the production cuts announced by OPEC and the shut-ins in the US oil patch. I think we've reached the floor for prices. Now going forward, especially over the next 2 years, that billions of dollars in cuts to production spending, that's going to start coming through. You just don't get an oil field back up and producing overnight, so we could very quickly go from a surplus to a deficit in oil supply, and that's going to push those prices back up. And I know a lot of you are worried about that lower oil demand on those electric vehicles, but we're still years away from peak demand. In fact, Bank of America doesn't think that we're going to reach peak oil demand until 2030, and other firms put it at even later. Now I'm going to highlight a couple other energy names here in the group, but Nation, I truly believe if you buy just one energy stock for this rebound, I think it should be Chevron. The company has the lowest break-even production price of the 8 majors. The blue dots here are the price for each oil company needs to break even in 2020, with the red dots that 2021 price needed. RDS and Total are close, but Chevron is really the leader here in that low-cost production, and that's going to mean it's going to be the first to return to profitability once the price increases. CVX will go ex-dividend later than the other stocks on our list, usually mid-November, February, May, and August, which means you'll collect that dividend payment towards the end of the month. Analysts have targets for Chevron around $99 per share, which is a 27% return on the current price, beyond that 6% plus dividend yield. Next on our list is mid-cap life insurer Unum Group, ticker UNM, and a 6.3% dividend. Now financials are another group that have been hit hard in the pandemic, but offer that value return as well as some solid dividends. You'll see in a lot of these stocks in this list, in fact, I tried to find the stocks that are not only going to put that cash in your pocket every day of the week, but are going to grow your portfolio as well. For Unum, besides booking revenue growth that was slightly higher in the second quarter, shares are trading for a price to book value of just 0.35 times. That's less than half the multiple it traded at just last year. So here you've got decent income fundamentals and a great value proposition with this one. Unum also goes ex-dividend later in the list, late in October, January, April, and July, which means you're going to get that dividend is going to go out in the second week of the next month. Remember, these dates you see here are ex-dividend dates, so the first day the stock trades without that payment. To get these payments though, you're going to need to have bought the shares no later than the day before these dates. So I'll go into how all this works in a minute and show you that full list, but for most of you that ex-dividend date isn't going to matter because these are all buy and hold dividend stocks. You'll continue to get that dividend for as long as you own these shares. First Energy, ticker FE, is one of the largest utility companies in the United States with 6 million customers across 6 states and pays a 5.3% dividend. Now, I'm actually surprised utilities haven't done better this year. With rock bottom interest rates, the dividend yield on this sector is a great opportunity for those cash-hungry investors, and these are some of the most stable cash flow companies you can find. This table, though, shows how bad it's been for stocks in the utility sector, down almost 7% so far this year, one of the 5 sectors in the red, and against a 5% gain on the broader market. But I do like the opportunity here. You get an undervalued stock in a sector that's relatively immune from the economy or a recession that pays a 5% plus dividend. Now, for its part, First Energy has come under pressure lately on claims of illegal contributions to 5 Ohio politicians, but the hearings and the news don't seem to be pointing to any legal liability on management's part. Basically, here you've got a company with a strong utility and transmission business that is at least 20% undervalued and offers a great dividend while you wait. This one goes ex-dividend during the first week of November, February, May, and August, and it's actually increased its payout this year. Next in our dividend income list is Invesco Limited, ticker IVZ, the 7th largest asset manager in the United States. Now, active asset managers, so those more focused on beating the market with their funds than just that passive indexing, they've had a tough time competing over the last few years. But Invesco's $1.1 trillion in assets under management really gives it the size to survive in a consolidating market. The company closed its acquisition of Oppenheimer Funds late last year, and the increased scale has really added to that profitability and the cross-selling it can do. It's still booking a solid retention rate of clients above 75%, and the cash flows here should support a higher dividend when we get to a less uncertain economic environment. Invesco did cut its dividend earlier this year, but even on that 15 cents per share payout, you're still collecting a 5.9% dividend yield, and I think the payment gets back up to maybe that 20 or 30 cents a share next year. We'll get back to that list of dividend stocks in a minute, but I want to get your opinion on this. I want to narrow this list down to maybe like a super list of dividend-paying companies, and I want to hear which are your favorites. So after watching through the video, scroll down and let me know in the comments below, what are your top 3 favorites from the list? What are your top 3 dividend stocks, and which should I put in that super portfolio? Next is the largest real estate investment trust in the office space market, Vornado Realty Trust, ticker VNO, and its 5.9% dividend yield. Vornado is another one that's been hit hard this year, down 45% on the idea that everyone's working from home now and won't need that office space. I think it's a little bit of an overreaction though. Take it from someone that's worked from home since 2013. Sometimes you just want that office environment, and most companies are still planning on having a majority of their workers work on site. Even Facebook, which in May said that its employees could continue to work remotely, just signed a huge leasing deal with Vornado for 730,000 square foot office space in New York City. Vornado is a quality portfolio of real estate, and I think you get at least a 25% upside in the share price here along with that dividend. The company cut its dividend only slightly last quarter. That December payment that you see here was a special dividend beyond its normal schedule, so still a strong payout and a good stock. Next is one of my favorite regional banks, Citizens Financial, ticker CFG, and a 5.8% dividend yield. We added Citizens to our 2020 dividend portfolio in August, and it's a strong value play in the space. The bank has doubled its loan loss provisions account to $2.4 billion over the last 2 quarters, and I think a lot of that gets moved back into earnings as loan defaults come in less than expected. Shares of the regional bank trade for just 0.52 times on a book value basis against a history of trading around 0.8 times multiple, so that represents a 35% upside potential beyond the dividend. Now, Citizens is one of the few banks to increase its dividend this year, so not only that value sector of financials, but also a best of breed in the group. Another favorite long-term holding of mine, CVS Health, ticker CVS, and its 3.5% dividend yield. CVS has a lock on the healthcare delivery system and benefits from that in-store effect, selling higher margin items along with its groceries and pharmaceuticals. The company is front and center on the virus testing and could see a huge upside from the eventual vaccine administration. Now, CVS beat expectations for earnings by 17% last quarter, and this is a solid value play at just 1.14 times on the price-to-earnings growth basis. CVS has been building its healthcare dominance for more than a decade, adding pharmacy benefits manager Caremark in 2007 and insurance with Aetna in 2018. It basically has a hand in every step of the healthcare delivery system and can use that to squeeze out every penny of profits. Now, against that, CVS hasn't done a great job of growing its dividend payment, but it has been consistent, and I think the future cash flow can support a higher payout from here. Shares go ex-dividend usually around the 22nd or the 23rd of October, January, April, and July. Shares of Caterpillar, ticker CAT, have lagged along with the other machinery stocks, but I think it could be building to something big. Caterpillar is the largest construction and mining equipment producer in the world, and while construction growth has held up, that mining segment has lagged hard since gold prices plunged in 2013. Now that gold is hitting all-time highs again, though, we could start seeing a boom in capital spending by the miners, and top-line sales for Caterpillar could jump higher. The stock goes ex-dividend mid-month here, so earlier than most on the list, and pays a reliable 2.7% dividend yield. We're not even halfway through our dividend income list yet, but I want to personally invite you to our private Facebook group, Let's Talk Money Together. I love this group because it's a great way for you and the community to have a conversation, talk about investing and making money. I'll leave a link in the video description below, or just go to Facebook and look for that group, Let's Talk Money Together. A great sleeper stock here, Kraft Heinz, ticker's KFC, and its 5% dividend yield. Now, Kraft finally came out with a serious strategic plan last month, selling its specialty cheese business for $3.2 billion, and really just outlining how it's going to leverage its scale and cut costs. The sale will go a long way to reducing that $28 billion in debt, down over $2.7 billion in the last 3 years. 5 years have passed since the shares went public again, and this is typical of those private equity issues. We had a company that was just so bloated with debt that it couldn't do anything. We're finally at a point where Kraft has some flexibility. It is still a great value of just 1.5 times sales and strong cash flow to support the dividend going forward. Shares will go ex-dividend later in the next month, and then again in March, May, and August. We added mall operator Macerich, ticker MAC, to our dividend portfolio last month, and it's one of my favorite turnaround plays. Macerich owns 29 Class A regional malls, along with another 19 malls as part of a partnership, and 12 non-mall properties. It's a total of over 50 million leasable square feet and averages $800 in sales per square foot, which is well above the average for mall property and just really speaks to the quality of its assets. The company sold over $4 billion in lower quality mall space over the last 8 years, so really went into this thing already positioned for that quality. Now, occupancy is still over 91%, though rent deferrals probably mean it's going to fall a little bit over the next couple of quarters. Rent collection has improved from just 40% of the rent due in April to over 66% in July, so definitely some signs of stability here. Macerich cut its dividend in April, but then increased it again in August for an 8% yield, and I think this one is at a point where the cash flow can support it. Another strong dividend stock in the energy sector here, ConocoPhillips, ticker COP, and a 5% yield. Conoco has come out saying that it can sustain the dividend and its operations at $40 per barrel of oil, so if we are at a floor in prices, the company will have that cash flow to compete. That low-cost production is helping the company find the cash to invest in new fields when some of the higher-cost producers are struggling. So we could actually see some surprising growth for Conoco over the next few years. The company has managed to continuously increase its dividend, even in that weak market for oil, which really speaks to the quality of cash flows. Analysts have an average target price of $50 per share over the next year, which would be a 42% return on top of the dividend. Our next dividend income stock here, Pentair, ticker PNR, a leader in water treatment with its operations in 34 countries. While the industrial side of the business did take a hit last quarter, the company was able to surprise on the upside from the strength in its residential pool segment. So this is a diversified business model that can perform in any economy. Between pool systems, filtration, and flow technologies, this company books revenue from business, government, and consumers. It's only a 1.7% dividend yield, but the company has been consistent about increasing the payment since that 2018 spinoff, and there's a good value in these shares. We've got 7 more dividend stocks to highlight, and stick with me because these last 2 groups produce an average dividend yield over 4%, more than twice the market yield. I do want to go through real quickly how I picked these stocks though, how to put together a portfolio so you can find your own dividend stocks or just adjust the portfolio when you need to. Now the concept is easy, but it took hours to put together the data. I took the 366 stocks in the S&P 500 that pay dividends, nearly 400 large cap companies. I then went to the stock page for each one of these. You can find this on any investing platform, but I went to Yahoo Finance and then to this historical data tab. From here, I changed the time period and then to show dividends only to see the dividend dates for the last 5 years. I took that and copied it into my spreadsheet for every single stock, noting the dividend dates over the last year. And once I did that, I could note when each dividend stock paid out on each day and then pick the best for our portfolio. For example, for today's video, I picked the best 19 out of 81 stocks going ex-dividend in mid-October through mid-November. This allowed me to not only create an income portfolio that pays out nearly every weekday of the month, but also to select only the strongest companies with the highest dividend yields. This next stock is our sole tech play on the list with ORCL Corporation, ticker ORCL, and a 1.6% dividend yield. Now, despite that fairly low yield, I really like the upside in Oracle. That deal for TikTok, whether it gets passed or not, shows the company isn't afraid to innovate and explore new business areas. It's already a leader in that shift to cloud-based IT solutions, and now this adds a consumer component to the business. Oracle here is one of the first to go ex-dividend on the list, right around the end of the first week in October, January, April, and July. Now, if Oracle doesn't end up getting that TikTok deal, there are some other options here you can choose from for that alternative around the same time. Here you see that there are no dividend stocks going ex-dividend on the same day, on the 9th, but there are quite a few on the 8th that we can choose from. I still like Oracle though, even without the TikTok deal here. Another insurer here, in fact the largest life insurer in the United States, MetLife, ticker MET, and its 4.9% dividend. Now the big weakness in insurance, and in fact with most of the financials, have been those low interest rates. Insurers carry a huge amount of cash to pay the premiums, so they have to invest that money into safe fixed income and other assets which really aren't earning much of anything right now. But the insurers like MetLife have been slowly expanding into these other assets like private equity and other high yield assets, so that has been helping the returns, and there's a lot of value locked up in these shares. Despite that low rate environment though, insurance is just a solid cash flow business, and MetLife consistently increases the payout. Consolidated Edison, ticker ED, is another good pick in the utilities sector with a 4.1% yield and a great safety stock. Now, Con Ed is primarily an electric and natural gas provider in New York and New Jersey, producing one of the most stable earnings growth in the sector. The company recently pulled back on some of its investment spending, which should support that cash flow while still growing the business. Con Ed has increased its dividend for 46 consecutive years, and although dividend growth has slowed a little bit to protect that cash flow, the company is just a cash flow machine. 4 more dividend income stocks to highlight, then I'm going to show you the entire list and the dividend dates that you need to be watching. Shares of Colgate-Palmolive, ticker CL, have done well this year on that safety play, but still provide a good 2.3% dividend. You'll see some of the companies on the list offer a little bit more upside return potential for more risk, but I also tried to include enough like Colgate for that safety and the certainty. Like Con Ed, this is pretty much the ultimate in that cash flow reliability with a commanding lead in its brand segments. Colgate controls a third of the toothpaste market share, more than 2.5 times its largest competitor. It also owns the #1 brand in a lot of its other consumer products. Sales growth here runs about 5% a year, and the company is continuously improving on its cost structure just to squeeze out more of those profits. The shares go ex-dividend later in the month, around the 3rd week of October, January, April, and July. Shares of Fastenal, ticker FAST, have surged 39% this year, but I still like the 2% dividend yield and the upside. The company distributes industrial and construction supplies, with safety products really taking the shares higher this year. The sales growth we saw in the first and second quarter could slow a little bit from here, but construction is still doing really well, and I think industrial picks up the slack left behind from some of those mask sales. Fastenal has a pristine balance sheet here with only $400 million in net debt, which is extremely low for a $25 billion business. It regularly increases the dividend payment, so I think you can be happy even if that current yield is a little lower. Alliance Data Systems, ticker ADS, has been one of the hardest hit stocks on the list, with shares down 65% this year. Managing airline loyalty and miles programs has been a big part of ADS's revenue, so you can imagine 2020 has been a rough year on business. Net income was down 74% in the second quarter, and credit card services revenue fell 24% from last year. Still though, loyalty programs are a staple of the airline sector, and we're a consumer society, so I don't see an existential risk in the credit services business either. Earnings will probably remain weak for the rest of the year, but should recover quickly in 2021, and the shares are just extremely cheap here. Analysts have price targets around $60 a share, which is 27% higher than the current price. The company already made that hard decision to cut the dividend in May, so I think the cash flow is safe from here. Our highest dividend yield stock here with Kinder Morgan, ticker KMI, at an 8.1% yield. KMI is one of the largest pipeline operators in North America, with 70,000 natural gas miles and 10,000 miles of oil pipeline. As tough as energy has been over the past few years, we're always going to need to move oil and gas through these pipelines, and there's a lot of value in these shares. Case in point, besides the average analyst target of nearly $18 a share for a potential 32% return, the company's founder keeps adding to his stake, buying more than 1.7 million shares this year for more than 11% of the company. Despite that weakness in energy though, Kinder Morgan has been able to consistently increase its payout, now producing an 8% dividend yield. Here's the entire list for this month: 19 stocks to pay out dividends over the next month, plus Realty Income, ticker O, which we added last month. Remember, these dates you see here, these are the ex-dividend dates, so you need to own the shares before this if you want to collect that payment. These stocks will generally pay out in November, February, May, and June, and you'll get a dividend every single weekday. Click on the video to the right for the first video in our daily dividend income series, your dividend income stocks for October, January, April, and July. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.